Thank you, Mr. President. I'm here to lend my support to a measure that I've had the honor of working with the senator from Pennsylvania, Senator Toomey, and to work side by side with the chairman of the Banking Committee, of which I'm a member, the senator from Idaho, Senator Crapo. And I very much appreciate the leadership that both those individuals and others of my colleagues have provided over a long period of time on this issue. Dodd-Frank was passed as a result of the concerns that many had across the country and here in the Congress in regard to the financial challenges that our nation faced resulting from mortgages that were sold. It really was a Wall Street crisis that in so many ways became challenging for Main Street. Main Street being having the consequence of having the difficulties presented to them is based upon what happened on Wall Street. And in so many instances, we ended up paying the price, the consumer ended up paying the price. But as we tried to correct the problem, when Dodd-Frank was passed, it got way beyond the culprits, those who were culpable for creating the financial circumstances in our nation, and began to penalize those who had nothing to do with it. And one of the creatures of the passage of Dodd-Frank was the Consumer Protection Financial Bureau. And one of the aspects of the Consumer Protection Financial Bureau was their efforts to regulate indirect auto lending. Mr. President, I think the chairman, the senator from Idaho, did a great job of explaining this resolution. But we have the authority today to reject the decision that was made by the Consumer Financial Protection Bureau, and I hope that my colleagues will join me in doing so. I introduced this resolution to accomplish that. Senator Toomey made clear by his efforts that this guidance that was issued by the Consumer Protection Financial Bureau is subject to a CRA, and that is our mission today to accomplish the passage of that CRA. I just jotted down while the chairman was speaking perhaps just 4 or 5 points that I would make to my colleagues. Those who lend money to someone buying an automobile had nothing to do with the financial collapse that occurred as a result of the mortgage crisis in 2007 and 2008. I think Republicans probably made a mistake. I can take out the political word probably. Republicans would make a mistake in saying we are going to repeal Dodd-Frank, and Democrats responded by saying you are never going to touch Dodd-Frank. And as a result, since 2008, we've been unable to correct the problems that many of us saw in a bipartisan way with Dodd-Frank. Those who say we're going to get rid of the entire thing, those who say you can't touch it, and therefore the consumers, the citizens of this country have struggled, have been damaged by the consequences of Dodd-Frank. Today we deal with a specific provision, and that again is the indirect automobile lending, circumstance in which financing is arranged by someone who sells an automobile in their business to make the deal work for the consumer who wants to buy the automobile. I would outline these 5 points. First of all, this ought to be a relatively easy decision because automobile dealers are specifically excluded from the provisions of Dodd-Frank. So, in my view, the Consumer Financial Protection Bureau had to work its magic to try to find a way to regulate the financing of automobiles that were arranged for by the automobile dealer in contravention to the law that says automobile dealers are not covered by. I was not in the Senate at the time this amendment was offered. It was offered here in the United States Senate by my predecessor, Senator Brownback, and adopted as a provision in Dodd-Frank. It's very specific, and I just read before I came onto the Senate floor the language of the exemption, the exclusion, and again, automobile dealers are excluded from the provisions of Dodd-Frank, and yet the Consumer Financial Protection Bureau found a way to get around direct law, and in that sense, the intent of the United States Senate and the House of Representatives when it passed Dodd-Frank. So just on its face, we ought to decide that the CRA is worth supporting because we are really reaffirming the decision that was made when Dodd-Frank was passed. Second, the process that the Consumer Financial Protection Bureau used, they didn't draft a rule and go through the rulemaking process. They didn't put anything out for comment by the industry that would be affected or by the consumers that may pay more as a result of the passage or the enactment of this guidance. They created something that regulatory bodies often do and try to provide, the word is guidance, and what they say they're doing is providing direction without passing a rule to those who might be affected by the rule. But as a result of just using guidance, no input was solicited, no input therefore could be given, and the Administrative Procedures Act was avoided. I remember when the director of the Consumer Financial Protection Bureau was in front of the Banking Committee. When asked about this, how can this be? It was simply, this is guidance and the Administrative Procedures Act doesn't apply. And yet, as we've seen, the GAO has recently concluded that this is the same outcome, the same result of as rulemaking would be, and therefore subject to the CRA. What that highlights for me is in two instances already, CFPB finagled, created a way to get to an outcome they wanted without following, in this case, the Administrative Procedures Act, and secondly, in violation of the statutory prohibition against having anything to do with automobile dealers. So for those two reasons, we ought to be opposed to the guidance that was directed to the automobile dealers and those who lend money by the direction of those automobile dealers. The third item I would raise is what this guidance is designed to do is prevent discrimination. What they claim they were doing is to make certain that interest rates are not different based upon a person's race. I have no qualms that that's a desired outcome, but because you can't ask a person's race, there's no way to know. And so what the Consumer Financial Protection Bureau did was create a computer program, an algorithm, in which they determined they guessed as to what a person's race was based upon their last name, how it sounds, and secondly, on their zip code. So never was the Consumer Financial Protection Bureau ever able to provide the evidence that anyone had been discriminated against, only that if you use a computer program and run a bunch of numbers through it, the algorithm based upon what a person's name sounds like, which I guess in my mind is discrimination in and of itself, but secondly, the zip code, perhaps the same thing could be said about that, to determine what race a person is or was. So the methods by which the Consumer Financial Protection Bureau determined discrimination were flawed. In fact, a bipartisan report indicated that the 41% of the determinations were inaccurate. So not quite half of every time the algorithm guessed what the race of a borrower was, they were wrong. And yet that apparently was sufficient for the CFPB to believe they had a basis for determining whether or not someone was discriminated against. I can't imagine many Americans would find it comforting to know that only a computer program determines what somebody believes their race is, again, based upon a hypothetical, not upon actual fact. And so, again, the method by which the guidance was used to determine discrimination was significantly flawed, and a process by which I can't believe that many Americans would find comfort in. What I would say finally is that elimination of the guidance, passage of the CRA today, would not do anything to change the prohibition against discrimination. It's not that if the CRA is adopted, that discrimination now becomes legal. And in fact, discrimination has, we all can agree, discrimination has no place in our society or in our economy. But the absence of this CFPB guidance does not make discrimination legal. It does not amend or modify the Equal Credit Opportunity Act, and it does not change Reg B, which allows for enforcement of that act. So what we are about is trying to correct the mistakes by the Consumer Financial Protection Bureau under Dodd-Frank, which says you can't deal with automobile dealers, trying to correct the problems that the Consumer Financial Protection Bureau created by using an algorithm to determine discrimination, and at the same time not do anything to change the prohibition, the illegality of discriminating against a person based upon that person's race. We also, I think, can easily make the case that this kind of regulation, this kind of guidance, this effort by the Consumer Financial Protection Bureau causes damage to the consumer, who therefore will not get the benefit of an appropriate rate of interest because of the fear of this guidance, which then ultimately results in just a standard interest rate for everyone. Mr. President, we have the opportunity today to correct a problem that was created in contravention of law, that used a flawed method to determine whether or not a person was discriminated against, and to improve the circumstances that consumers face at a time in which every dime matters. And so we should see an improvement in the opportunities for people to borrow money and to buy an automobile for the benefit of themselves and their families. Mr. President, I hope my colleagues will join me, as they did in the motion to proceed, and that this CRA will be adopted over the next day or so. Mr. President, I yield the floor.